Coming up today, stocks finish flat. Why the melt up will continue. The IPO pipeline heats up. Hot stock circle dives, along with new home sales. Pressure builds on the Fed. What's got Wall Street panicking? And the AI kings back out on top. It's going to be a good one, guys. Let's go. Well, it was a bit of an interesting day in the market looking at price action, even though the S&P 500 pretty much finished flat, thanks largely to mega cap tech and Nvidia, which just hit brand new all-time highs, making it the largest company in the world once again, overtaking Microsoft. I'll get into that in a minute, but just looking underneath the hood, there was a bit of selling, Tesla coming off a bit, and especially in defensive sectors like staples, utilities, healthcare, and we also saw a bit of selling in industrials and especially in New York-related REITs, and I'll explain the reasons for that a bit later on as well. But nonetheless, the fear and greed index is still firming up here in the greed zone at a healthy 59, and the market's still coiling up on really low volatility here. Tiny little spinning doji on the spider, but a bit of weakness underneath the hood, especially in small caps today. The Russell 2000 off more than 1%, and it hasn't been able to reclaim its 200-day moving average here in the grey line, unlike the Nasdaq currently at all-time highs, and the S&P 500 not too far off either. It was really Nvidia that stole the show today and helped power the Qs to high, showing once again that AI leader is leading the charge in this AI-driven bull market. And that's a pretty good sign overall, considering that's what really kicked off this bull market that we're still in. And what you're looking at here is a chart of Nvidia's revenue. In the red circle, that's where ChatGPT was released, and the huge influx of other large language models, LLMs, chatbots that most of us use every day now use an extraordinary amount of compute power, for which Nvidia's graphic processing units, GPUs, were discovered to be great at handling that, initially designed for gamers back in the 90s. But now Nvidia stands to benefit not only from the explosive growth in AI, but what's next up, robotics. And just like the CEO said today, he believes robotics and AI are the two biggest opportunities for the company. And this isn't just speculation. AI is already here and taking jobs and dramatically improving our productivity. We just heard from Robinhood CEO today. He said 65% of its customer support cases are now being handled and solved by AI. And speaking of Robinhood, why they're on fire is they're the most popular financial app with millennials, the future of banking. And they're also quickly expanding their product lineup, getting into prediction markets, retirement accounts, automated strategies, and even credit cards. Not to mention retail trading is on fire, and hence why Robinhood's been doing exceptionally well. In addition to other retail favorites, Nvidia not being the least. And there it is on a nice big green candle today, smashing up to all-time highs, $154 a share. And just as I noted after earnings, they did come out with really good numbers, really good guidance. And as we can often see, the market can just take a few weeks to kind of appreciate that. And we get a pattern known as post-earnings drift, which Nvidia appears to be experiencing now. But it isn't just AI and robotics. We've also got what I think could be a once-in-a-lifetime convergence of megatrend, in addition to AI, robotics, other things like robotaxi, flying cars, synthetic biology, space exploration, 3D printing, quantum computing, drones, crypto, the list goes on. Any one of those reasons is enough for the market to get excited, hang its hat onto something. But in addition to the convergence of about a dozen megatrends, we've also seen a huge explosion in the size and power of retail traders, which shouldn't be underestimated now. Always written off as being dumb money and small. We are growing in size and influence, especially since 2020, when many of us were stuck at home, which helped to create millions of new retail investors. And the market is set to grow significantly for online trading platforms. I don't think this is going anywhere. Smartphone trading apps, Robinhood, and basically everybody around the world easily able to access the US market right through their smartphone. And so yes, stock market valuations are rich, looking on an absolute relative level to history. That's why we're more likely to be on the cusp of a melt up. Not to mention, we've got global M2, which is basically the supply of global money, strongly moving up this year as central banks around the world ease conditions, except Jay Powell, which I'll get into in a minute. But pushing global M2 forward 12 weeks, really strong correlation with Bitcoin, the number one risk-on liquidity proxy asset in the world, suggesting we could be on the cusp of further gains, especially with the likes of the leader of this bull market, Nvidia, sitting at highs, and Bitcoin not too far off either. Another big tailwind we've got is companies are cashed up as ever, and they're using more of that cash than ever to buy back their own shares. Almost 300 billion just last quarter alone. That's up nearly 21% from fourth quarter last year. That's a huge structural tailwind for stock prices. And just looking here in the short term, post-election years performed pretty well in July, which kicks off next Tuesday, along with Q3. But then we can normally see a little bit of weakness consolidation in August, September, before we normally have a good Q4. And one stock I think that is poised to catch up is Alphabet Google, who I consider one of the most quality companies holding some of the most quality assets in the world that is definitely at the best valuation compared to other mega cap tech stocks. And we just learned that Google's Gemini added 13 million users last month. That's 2 times ChatGPT's growth. Not to mention Polymarket has Google way out in front in terms of having the best AI model at the end of 2025 using a number of statistical measurements. And this is a pretty liquid market with Google's odds way out in front at 60%. Head and shoulders above OpenAI at 18%, even doing better than XAI. And there's the apparent GPT killer app from China, DeepSeek. Not so much when looking at the hard data, 2% odds. And let's not forget Google-owned Waymo is currently the leader in robo-taxis. This is already real and happening. Currently delivering over 250,000 automated taxi rides per week. And they just announced that they're expanding into Atlanta exclusively on the Uber platform. And so isn't that interesting? Because Tesla Robotaxi is supposed to be the Uber killer as well. When in fact on the back of that news, Uber is ripped up and is also sitting at all-time highs here. And even though Tesla had an initial bump up on Monday after a successful Robotaxi launch in Austin, it's pulled back and is still well off all-time highs. So it's actually Tesla that's got to prove itself in the Robotaxi market because Waymo's already running at scale, and I think it's a great move to already partner with a dominant platform, Uber, that's well entrenched in the ride-sharing business. But at the end of the day, I think all three can succeed, and that's why I'm a long-term shareholder in all three. And I think Alphabet Google currently represents the best value out of all three. And they very well may end up spinning off Waymo, which should make for a good payday for Alphabet shareholders. But I do think it is a smart move for both companies to partner up and take on Tesla. But like most markets, you can have and you should have 3 or 4 players dominating and all doing well. And that's another industry that already is and is going to process an extraordinary amount of data. And the best way to power that is nuclear energy. And we just got word of one of the biggest names in the industry also shaping up to go public. Holtec International plans to go public within several months, and that would be the largest nuclear energy offering in years, giving us investors one of the few pure play ways of buying into the industry. And they could come on with a valuation somewhere around 10 billion in what's already a hot industry. Looking at the Global X Uranium ETF, URA, and uranium miners as well, we've seen signs of some big institutional money coming into this ETF for the first time. But a new IPO not doing so well today, Circle, after being on an absolute heater. Some of that hot air has come out of it again today, closing down another 10% after yesterday's 15% fall, whilst at the same time Coinbase continues to rally up again. And as I've been saying for a year now, I think this is the best, safest, and most appealing long-term way to play crypto. Owning a piece of the US leader in the space, getting closer and closer with the US government, and just going out to a monthly chart. It's kind of crazy to say, but even after this monster rip of late, it still might just be completing one big long 4-year base and break out. I think this might surprise a lot of people with how far this can go. Given its market cap is still only 90 billion, I wouldn't rule out a $1 trillion valuation on Coinbase even by 2030, if not at some point in the next 10 years. Especially if the next government come in after the Trump term is still pro-crypto. That should keep the tailwind and regulation there for this industry to flourish, especially now that stable coins have gone legit. I think it's inevitable that banking does go more and more digital. It's just how that's going to look and who's going to benefit the most is the question. And moving on, just before I show you what's got Wall Street panicked, we're getting more weakness in the housing market. New home sales plunging to a 7-month low, a lot steeper drop than what was expected. And that's partly due to mortgage rates still being quite elevated at 7%, creating a high hurdle for new home sales. And given most American homeowners have locked in low rates, there's little incentive to sell existing stock as well. And on the back of that data, Goldman Sachs has lowered their Q2 GDP expectations still to a healthy 3.9%. The US economy is expected to grow in this current Q2 quarter, finishing Monday. But we do have tailwind there with deregulation, with Treasury Secretary Scott Bessent looking to loosen requirements on banks' capital reserves, which will help bolster the US economy. And these were put in place coming out of the GFC 2008, which some banks were way too leveraged, 30 to 1, a lot of them having big trading desks, underwriting shoddy loans. But as markets and politicians often do, they overcompensate by going hard in the other direction, with now that looking to be pulled in line. But the thorn on everyone's side, the guy who doesn't want to loosen financial conditions in America and help out millions of struggling consumers, Jay Too Late Powell, who's trying desperately to hang on to his wait and hold stance, speculating on what tariffs might do to inflation, and actually pushing back on other Fed officials who are arguing for a live July meeting, meaning a rate cut should be up in the air. But I agree with Vice President JD Vance, and one of the most viral posts on X last night. I'd love to hear an argument for why Powell cut 50 points right before an election, but can't do it now with inflation lower. And so Powell was criticized for doing a massive interest rate cut in his last meeting before the election last year in order to put the economy and markets on a sugar high going into the election. Didn't quite play out for him that way, but it is strange now that we do have inflation lower than what we had back then, and by quite a bit too. In addition to the labour market being softer, that he's not even willing to indicate that he's open to cutting rates soon. But the pressure is building on him, especially from the federal government. Howard Lutnick, Secretary of Commerce, coming out with strong words today and pushing back on Powell and his logic for why he doesn't want to potentially cut rates. Same with the Director of Federal Housing, who's been a strong critic of late. Now accusing Jay Powell of authorizing almost $2 billion worth of renovation for their offices in Washington, D.C., as they're willing to spend taxpayer money, dripping their offices in luxury, whilst millions of consumers struggle with the cost of repaying back their debt due to high interest rates. And of course, the president isn't letting up either. Today, when asked about Powell, saying, "I think he is a very stupid person, actually." And the bond market agrees. US government bond 2-year yield, 378, compared to where the Fed's at, 437, the midpoint of their overnight Fed funds rate. Moving on to another hot topic on everybody's lips. In the financial community today, Wall Street panics over prospect of a socialist running New York City. Democratic socialist Zoran Mamdani, not sure if I pronounced that right, won the primary and very well could be on his way to being the next mayor of New York City. His platform includes raising taxes on high earners, rent freezes, subsidized housing, free bus service, and government-operated grocery stores. Seems some people don't learn from history, therefore we need to repeat it. He's also gone on record as labeling the New York Police Department as being racist and calling for them to be defunded, which if successful, he may actually turn New York into some parts of Europe, along with the dramatic rise in crime rate we've seen over there. Now with the United Kingdom, France, and Spain having a similar level of crime to that of third world countries like Somalia, Pakistan, Haiti, and there's actually now less crime in Ethiopia than some of these European countries, looking at this global crime index. And he does have high odds to become the next mayor, 72% here on Polymarket, head and shoulders above the next favourite, Eric Adams, at 23%. No surprise that's drawn the attention of the president, calling him 100% communist lunatic and saying that it's a big moment in history for the country. Also some sharp words from White House Deputy Chief of Staff and Homeland Security Advisor Stephen Miller. New York City is the clearest warning yet of what happens to a society when it fails to control migration. And looking at some other commentary from FinTwit here today, Daniel Loeb, big-time hedge fund manager with a large following on X, came out and said it's officially hot commie summer, along with another billionaire hedge fund manager, Kyle Bass, commenting, "You have to leave. You must move to Dallas. It's time for you to embrace your inner Texan." Because like the brilliant Margaret Thatcher once said, the problem with socialism is that you eventually run out of other people's money. And unfortunately, New York might have to learn this the hard way. But not to worry, because New York local Bill Ackman says he has a great idea and he's going to share it soon because he's been a bit pressed, but he's now optimistic. Even Tom Lee joining in on the viewpoint being shared of bailing on New York City. And that's kind of a trend we've already been seeing for a few years. A lot of high net worth individuals and businesses relocating from New York to other more pro-business friendly states like Florida and Texas. And I think this just adds wind to a new Texas stock exchange. And as a trader and investor, I'm glad to see that because New York does have a bit of a monopoly on stock trading. And now that it looks like it's going to be headed up by a socialist who specifically wants to come after the wealthy, he could have negative influence there for us if it weren't for this Texas stock exchange that's set to launch next year, along with the NYSE looking to set up shop in Texas as well. So this is a bit of a shift in where business is going to be done in the States. And unfortunately, could be a shift in the wrong direction for culture as well. Instead, we should all take a look at what's happened in Argentina, which was overrun with socialists for decades, sending many citizens into poverty. And I know because I live in a town where we've got a few people from Argentina, and I've been able to speak to them directly and learn their first-hand experiences with socialism, not being able to afford groceries, rampant crime and corruption, and even though economists and many other influential people got together to try and warn of what Milei would do to Argentina. The fact is, in a year, he's been able to bring inflation way down, and like we just heard yesterday, Argentina's economy is one of the fastest growing in the world now. 5.8% year-over-year growth, and that just goes to show having the right leader and the right policies does have a material effect on the economy and everybody in it. And so that's why we've seen some New York-related stocks and REITs get sold off hard today as markets price in a strong potential socialist leader that is likely going to come after them. But the good thing about the United States is there is 50 states, and so the economy is very mobile. And businesses, along with labor, are easily able to relocate and can be incentivized to do so. But looking at a bunch of these banks and REITs, many coming off 4-5% today, they could very well foot the bill as they just can't up and move all their office buildings as easily as a business that leases one. Moving on, we're seeing more and more growth in prediction market. Polymarket is for non-US residents, but also very similar platform for US residents. Kalshi just hit a $2 billion valuation. If that was a stock, I would absolutely buy some at a $2 billion valuation. I think that's cheap. And they'll no doubt come onto the market at some point in the next couple of years as well. think it's the future of betting. Already getting huge amount of business in sports betting because you're not playing against a house, for which if you constantly win and take their money, they'll play around with your account, if not just shut it down. But instead on these prediction markets, Kelshi and Poly Market is just like a stock exchange, playing against other participants, and you can provide liquidity with limit orders, just like stocks as well. And so I think this is going to experience huge growth, very closely related to financial markets. And I actually have a dedicated chat thread in my private trading room for prediction markets, where I and my members are sharing bets we're taking, including one I shared with my members yesterday, betting that Nvidia would be the largest company in the world by market cap come the end of this month on Monday. As I noted to my members, there was only a 1% difference with Microsoft's market cap, and Microsoft was a lot more overbought. The market running hot with Nvidia having a high beta. I believe the odds should be 48% chance for Nvidia, not 28%, which I got in at. And they're now currently at 78%, thanks to Nvidia's strong rip in the market today, giving it a market cap of 3.77 trillion versus Microsoft's 3.66. And so I'm looking to ride that all the way through to Monday and cash in on that bet, as I think Nvidia is looking pretty good here. Never want to be bearish at all-time highs. But if you're interested in this type of stuff, prediction markets, trading options, discussing stocks that have a lot of opportunities, like one I shared with my members a few days ago, that I'm actually long 40,000 shares of, as I believe it's a huge asymmetric opportunity, then click the link below this video and head on over to my website, clickcapital.io, and join the Market Makers Kit today and lock in a permanent 30% discount by using coupon code JUN30. And this code's only good for a few more days as we approach the end of June. So if you've been thinking about joining, getting all my custom indicators, access to the chat room, now's your chance to jump on board for a 30% discount. And just wrapping it up with a look at the VIX, getting a massive volatility crush this week. We're at 22.5 on Monday morning. Here we are in the mid 16, and we'd have to take out 16.23 to hit a low we haven't seen for a while, with the lowest print this year being 14.59. DSI currently -5, and that's because the S&P 500 is just an inch away from hitting all-time highs at 61.48, with the Nasdaq and the biggest stock in the market, Nvidia, already been there. Thanks very much for tuning in to Click Capital. My name's Jared, and I'll see you back here again this time tomorrow. Cheers.